Have you ever actually stopped and done the math on your life? Every single morning, millions of people wake up exhausted before the day even begins. You get out of bed at 7 a.m., rush through traffic, work 8 stressful hours, then sit in traffic again just to finally get home tired and drained. By the end of the day, almost 10 hours of your life are gone, all traded for money. But here's the question. Nobody asks, while you are working all day for money, what exactly is your money doing for you? For most people, the answer is absolutely nothing. Their money sits quietly in a bank account, earning maybe 1% interest, while inflation silently destroys its value every single year. Think about how crazy that really is. You work harder every year, but your money becomes weaker every year. And honestly, that's the financial trap most people stay stuck in forever. Today, I'm not going to tell you to become a day trader or gamble on random crypto coins. Instead, I'm going to show you the exact system ordinary people quietly use to build wealth while they sleep, travel, relax, or spend time with family. And the crazy part is, it all starts with just $10,000. Now I know some people hear that and instantly think that's not enough money to matter. But that mindset is exactly why most people never become financially free. Because wealth is not built through luck. It's built through systems, patience, and consistency. Right now, inflation is higher than most savings account interest rates, which means your money is literally losing value every year. Imagine carrying water up a mountain without realizing there's a hole in your bucket. No matter how hard you work, the water keeps leaking out. That's exactly what inflation does to your savings. Yet millions of people still believe one of the biggest financial myths ever created. Investing is dangerous. Saving is safe. But if your purchasing power keeps shrinking every single year, is that really safe? Another myth people believe is that you need to be rich before you can start investing. Completely false. You don't need millions of dollars or a finance degree. You simply need discipline and a system. Think about the gym. Nobody walks in on day one lifting 300 pounds. You start small, stay consistent, and over time the results compound. Investing works exactly the same way. Another huge myth is that investing is complicated. People imagine investors staring at charts all day trying to predict the market. But real investing is actually boring. And that's a good thing. The best investors in the world aren't constantly panicking or gambling every week. They quietly build systems and let time do the heavy lifting. So, let me show you the exact system I would personally use if I had $10,000 today. I divide it into 3 layers: the safety net, the growth engine, and the opportunity fund. The first layer is the safety net. 20% of the money, around $2,000, stays completely liquid in cash or a savings account. This money is not for investing. It protects you from emergencies. Because one of the biggest reasons people fail at investing is that life happens. Cars break down, medical bills appear, jobs disappear, and suddenly people are forced to sell investments at the worst possible moment. This emergency fund protects you emotionally because in investing, your emotions are usually your biggest enemy. The second layer is the growth engine. 60% of the money, around $6,000, goes into broad market ETFs. Simple, boring, effective. Instead of trying to beat the market, you simply become part of the market itself. Over long periods of time, economies grow, businesses expand, and markets move higher. But here's where most people make a massive mistake. They try to time the market. They wait for the perfect crash, the perfect dip, or the perfect moment to invest. But even professionals fail to predict the market consistently. Instead of investing all the money at once, smart investors spread it out over time, maybe $1,000 every month for 6 months. This strategy is called dollar cost averaging, and psychologically it changes everything. You stop obsessing over short-term price swings because the system keeps investing automatically no matter what happens. No panic, no guessing, just consistency. Now let's talk about the final layer, the opportunity fund. The remaining 20%, another $2,000, stays ready for market crashes, because eventually the market will crash. Headlines will scream that the economy is collapsing. People will panic and sell everything. But wealthy investors think differently. They see crashes as opportunities. When markets fall 20% or 30%, disciplined investors quietly buy while everyone else is running away. That's one of the biggest differences between emotional people and wealthy people. Now, maybe this still sounds overwhelming, but honestly, the execution is incredibly simple. Open a brokerage account, automate your investments, and stop obsessing over finding the perfect investment. Most wealthy people didn't become rich because they discovered magical stocks. They became wealthy because they stayed consistent for long periods of time. And here's the crazy part most people underestimate: compound interest. At an average annual return of around 7%, $10,000 can grow into more than $76,000 in 30 years without adding another dollar. But if you consistently invest even $200 every month, your portfolio could grow beyond $300,000 over time. That's not magic. That's simply time working in your favor. But let me be honest with you. There will be scary moments. Markets will crash. Your portfolio will turn red. You'll feel fear. But long-term investing is not really a battle against the market. It's a battle against your own emotions. Fear makes people sell low. Greed makes people buy high. But systems remove emotion from the process. And here's another truth most finance channels never talk about. Your portfolio is not your biggest asset. You are. Your skills, your income, your knowledge, and your ability to grow matter more than any ETF. Because the more income you generate, the more money you can invest, and the faster your wealth compounds. Financial freedom is not about becoming rich overnight. It's about slowly building a machine that works for you in the background while you live your life. A machine that keeps generating wealth while you sleep, relax, travel, or spend time with family. So, don't wait until you feel perfectly ready to start investing, because nobody ever feels 100% ready. The market will always feel uncertain. There will always be scary headlines. But every year you delay, inflation keeps stealing from you silently. And honestly, the most expensive mistake in investing is not losing money in the market. It's never starting at all. The best time to invest was 10 years ago. The second best time is today.